Good evening. Ken at Tortoise Capital will review the daily trading plan for August 20th, 2019. Market did not follow through today, broke down out of yesterday's doji on Monday. It's now below the Monday opening. We're still in the spring, but barely. Holding in the middle of the dragon, which is sloping up. We've had a P1, so the RLCO has crossed. Dragon sloping up, 30 has not. So we don't yet have an RLXD. So this would be an auto short tomorrow. If it violates today's low, you could reinforce that if it breaks through the dragon, but certainly through the belly of the dragon. So between the two red lines represents the pocket. The confirmation of failure would be breakdown below this it looks 286.61, the belly of the dragon. And then the next target would be down here at the PSAR, and then the 10-day and 30-day low, right around 283 is a downside target. Upside target, this would be an auto long at 293-ish, targeting Bollinger Band mean and the RL90. Next one would be the hump of the dragon at 301, and 302 would be the hump of the RL10, and all time. Targeting for 305 if all that works. So if it breaks through 301, and 302 and 305 are in play. Midpoint of the 10-day NDX and the 30, so nothing to see there. Still bull volatile. Short-term trading is favored. 10-day NDX is moving up. Almost, but not quite overbought yet. See, everything's in the middle on NDX. Still risk Z rising in the spring, so tentative swing longs are feasible. 10-day max pain candidates, usual suspects: Cisco, Chevron, Walgreens, Pfizer, especially Pfizer, ExxonMobil, GE. Any opportunity to get short, you do so. Brazil. More Cisco. Lots of auto framers to choose from. Many dojis today. No breakdowns out of the NDX. See strength down here in Apple. No symbol signals on it except for the doji. Home Depot. Cisco has had a rebound today off the bottom, but it's been horrible for 10 days, 1 month, and 3 months. ETFs showing a handful of auto framers reasonable, so I would be looking at Brazil, and that's probably it. Maybe there's more room in metals and mining and energy as the alternate plays. Defensive plays still the only ones really stretching above their river. All the negative ones steeply below their Bollinger Band mean, so any opportunity to get short those on market weakness and sector weakness and target weakness, you take advantage of that. Microsoft and Verizon have not been suffering from volatility, so exceptionally quiet, but not yet C3 pinches yet. Lots in the auto framer to choose from. I'm looking at Chevron, Cisco, United Tech, Pfizer, IBM. Daily squeezes of interest: Johnson & Johnson, the SPY itself, DIA itself, IBM. I like looking at the winter, so I'm looking at metals, mining, financials in Brazil, and then this stack here in the winter. The higher ones have rebounded better than the lower ones, so US Steel and IBM are still low in the winter. The summertime, these are ones that have been resisting this sell-off and are actually leading the way, so Procter, McDonald's, Coke, and Merck. That's the four horsemen that look good. United Health broke down, so Chevron and AXP and Pfizer, again, that's the quad of weakness for the little scavenger to come after. Brazil, Latin America, materials and finance, all weak on the 10-day and the 3-day and the 30-day. Market mosaic. This, if that's resistance at 293, then man, this is coming down to check 285. At a critical state here, keep your risk measured, powder dry, short-term horizon only. Get the market call right first. Bird in the hand is certainly worth the two in the bush these days. But volatility slowly starting to roll over on the ATR divided by price, and then the 30-period standard deviation of price back to long-term normal. Slope of the 30 at critical state here. It rebounded nicely here, but last time it was there, it failed another whole standard deviation. The 30 has collapsed. Again, we're looking for support here, but also if the 10 has had a nice bounce, but if it doesn't hold here, then there's more on the downside, and this is going to come down and test like 280. That's not looking good. Here's just a quick look at a worksheet I'm drafting. It's still in prototype. I think I'm going to build another section in here where I show the 5 steps of the owl so that I can get my favorites in here and start building out, where they are in that life cycle. But these are the ones in green that I'm especially interested in, having just read through them. Those are the ones I'm really going to concentrate on. The usual suspects, plus Devon and Cliff, who are approaching their RLXD. That's the 3rd step of the owl. That's going to be my primes. Okay, so keep your risk measured and powder dry.